This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. Scott Norse here with your Forex Report. Today is Friday, April 25th, 2008. After getting off to a very rough start, the U.S. dollar has staged an impressive rebound against the euro and several other currencies to end this week on top. Monday and Tuesday were both down days for the buck, which led to the euro dollar finally testing 160. However, the pair spent very little time there, as dollar bulls fought back with every ounce of strength they had. While they achieved very little by Tuesday's close, we have since seen a one-way path lower in the pair. Currency pairs including dollar Swiss and dollar yen were also big participants in the buck's rebound, while the U.S. currency struggled to pave a path higher in other pairs. The pound dollar was particularly volatile, with several 200-point swings higher and lower over the course of the week. We are still having a tough time deciphering any meaningful bias in those charts. The Aussie dollar and New Zealand dollar have both succumbed to the dollar's recent strength, although the Aussie still looks much stronger than the Kiwi, both technically and fundamentally. This week's U.S. data was some of the best we've seen in a while. That said, most of it was still nothing to write home about. Weekly jobless claims falling 40,000 yesterday was the most optimistic sign to us. Typically, we would see a steady trend higher in unemployment claims in a recession. On the other hand, housing data continues to deteriorate rapidly. Existing home sales did not plunge last month, but new home sales were the slowest in almost 2 decades. This means the economy may only slow further as American consumers become more conservative. Outside the U.S., data has been mixed. Germany's IFO Business Confidence Survey disappointed this week, along with UK retail sales. Of course, both of these economies still appear more stable than the United States. Finally, we have not spoken much about the war in Iraq or any other geopolitical issues recently, but had a scare today. Breaking news this morning reported a U.S. government-contracted ship fired on Iranian boats. This sent oil soaring, but the dollar held on. More than oil spiking higher, war with yet another country would almost certainly send the greenback lower. Now for the big picture. Investors of all shapes and sizes have been speculating on where the euro-dollar would peak since the end of last year. While we cannot speak to the long-term outlook yet, a near-term top appears to be in place at 160.20. Technically, the pair closed below the key 20-day moving average yesterday, and the weekly candlestick closing today has a very bearish appearance. We believe euro-dollar could test support levels including 155, 154.15, and possibly 152.30 in coming weeks. However, this will not be a one-way move. Given this scenario, we see the pound dollar risk to the downside as well. We believe from a current price of above 198 that 196 is a better target than $2. In the high-yielding currencies, we believe New Zealand will continue to underperform the Aussie dollar. The dollar Swiss, dollar yen, and dollar CAD all have further potential to the upside at this time. As with the euro-dollar, however, this will not be a one-way street. We do have to consider a few things as we make this assessment. First, the Fed will announce a rate decision on Tuesday. Of course, we believe the risk is that the FOMC will help rather than hurt the dollar for once. The consensus is for a 25 basis point cut, but some believe the Fed will not reduce rates. This leaves very little room for traders to sell the greenback on the news. The statement is expected to show a Fed that wants to keep rates at 2%, however. This means a dovish statement is the one big downside risk to the dollar. Other variables include oil prices and any further conflict with Iran. Obviously, lower oil and a lack of geopolitical tension bode well for the buck. Till next week, I hope you all enjoy your weekend. Take care.